All right, what is going on? Welcome back to another video. Today I'm going to spill some major sauce for you guys. It's going to be part one of a 3-video series of different strategies I use at different times in the market. However, they all have the exact same entry point. So today we are only going to be focusing on finding the highest probability continuation model trades. That being said, if you guys aren't already subscribed, go check out the rest of my videos. And if it's some content that you guys genuinely do enjoy, then go ahead, press that button. It means a lot to me. And yeah, with that being said, let's just jump right into this video. And one last thing, if you guys are confused as to what the hell is around my neck right now, it's a heating pad. I broke my neck and my back in a badass car accident in late 2020. And ever since then, I'm moving like a crippled old man. So basically I'm on my period. So yeah, that's why I have my heating pad around my neck. Anyways, to the actual trading portion and the important shit that we're going to be talking about today, catching the highest probability continuation model trades, right? So starting off over here on our left with our bearish example, okay? Say price came up, we swept out some buy side, we ended up tapping into a 4-hour gap, didn't really see a nice rejection, whatever. We end up coming, getting a resweep, maybe an SMT, maybe not. We don't necessarily need it. In this scenario, let's just say we have it for further confirmation, right? And let's say we actually miss this first inversion right here, right? So with our inversion right here, we missed it for whatever reason. Either it was bad price action, you weren't fully convicted, whatever. Well, at least now we have our higher time frame narrative, right? The buy side has been swept. We tapped into this higher time frame for value gap, and we still have our higher time frame objective and our daily objective available below. So if this is the case right here, we don't just want to enter blindly all the way down here because price can reverse at any possible moment. So what we're doing is we're literally just going to stay patient and wait for a condition to open up. What is a condition? Well, it's a 5 or 15 minute for value gap that you want to see get tapped into, and then see a rejection out of it down towards that higher time frame objective for that day. Now you can use conditions on any time frame you guys need to. They're constantly changing. I have a conditions video. I'll leave the link in the description, but for this case, we're going to be focused on the 5 and 15 minute for value gap conditions. Okay, well, let's say a 5 or 15 minute gap opened up. In this scenario, it's a 5-minute gap. Cool, we end up tapping into it. Awesome. What did we end up also doing? We ended up rebalancing this leg. Why? Because we tapped into a fair value gap at or near equilibrium of that range, of that distribution range that was happening. So cool. Once we tap into this gap, then we can look for an inversion out of it. Let's say we do get a clear inversion out of it. Awesome. This is the highest probability continuation model setup you can possibly take down towards this higher time frame objective. Now, hypothetically, let's say we couldn't enter off this, whatever, and we end up coming and taking out the higher time frame objective, and we end up opening up another 5 or 15 minute bearish for value gap. At this point in time, this continuation model that you guys are thinking is a valid continuation model is actually invalid because the major objective and the daily objective for that day has already been met. So typically when that happens, I would say about 8 to 9 times out of 10 when that happens, we are just going to chop around once that objective is met. Therefore, this trade is lower probability and less likely for it to play out and go in your direction. And then same thing goes for our bullish example over here. Let's say, okay, cool. We come down, hit this 1 hour for value gap. We see an instant rejection. We don't like anything in this initial move right here. So we stay patient. We wait for a 15-minute gap to open up. Awesome. Now our condition is coming into effect, right? Awesome. We come and retrace down into this 5 or 15 minute gap. Now it becomes, again, if-then situation. If we come down and respect this gap and see rejection, then we can go ahead and enter. Or if we just run right through it, then we're just staying hands off, probably an indication of bad price action. In this scenario, if we come down, hit it, reject it, let's say we get a 3-minute inversion, doesn't matter. Go ahead, enter off the inversion, stops at the lows. We still have our higher time frame objective intact. Aim for a 1-to-1 or whatever your RR is going to be for that trade. And this is the highest probability setup you can possibly have. And once again, once our highest time frame objective has already been hit, our daily objective has been hit, we open up another 5-minute gap, come and retrace into it. What's most likely going to happen after that? Well, we're probably just going to go sideways due to the volatility. And like I said, our objective has already been hit for that day. Now, with all that yip yap up there, you guys are probably asking yourself, what the hell is a higher time frame objective? How do I know it's a valid objective on the day? And how do I know if it's going to get respected or disrespected, whatever the case may be, right? Well, here are the 4 main higher time frame objectives that price tends to seek out on the daily during New York AM session and then chop around after. First one is going to be previous day highs or lows. Typically, if we haven't taken out the highs or lows already, we'll take one out and then go and seek the other. Or if we have already taken out, let's say, the high, and then we see a rejection, once we take out the previous day lows, we're most likely going to chop around. Same thing with the new day opening gap and new week opening gaps. Oh my God, my phone's going off right now. Once those higher time frame imbalances have been hit, same thing applies. It goes and tends to chop around. And then for the last 2, intermediate highs or lows or higher time frame LORL or relatively equal higher time frame highs or lows, right? So let's say our 4-hour chart looks like this, and we made a giant move up. However, we're trending back down. Okay, once this last low has then been hit and there's nothing resting underneath this low, I can assume, okay, after we hit this low and we're not seeing a valid rejection, maybe back to the upside, I can assume the objective is done on the day and we're probably just going to chop around and lose volatility. And if you don't know what an intermediate higher low is, it's just a higher low resting inside of a fair value gap. So say we have something like here from a few days ago, okay, and now we're trending back down. Once we take out that low, if we're not seeing good displacement back to the upside or continuing farther down, we can expect what? Just for us to come and chop around. Now, the last thing I want to go over before we get into our live market examples is our multiple fair value gap scenario and our multiple TP scenario. So let's start off with our fair value gap scenarios first. Same thing applies. We come and get our higher time frame narrative. We tap into the 4 hour, whatever. We miss our original entry. Price comes all the way down, has yet to hit our higher time frame objective. Okay, but we end up creating 2 5-minute bearish fair value gaps. You do not need to wait for the second one to get hit if price is seeing a clear rejection. And plus, since this 5-minute is all the way up here, what do? Well, we basically rebalance this range back into equilibrium. Now, it'll be a little bit different if the 5-minute was like all the way down here and the other one was up here. Then yeah, you probably want to wait for the second one to get hit because this is the one that is closer to equilibrium at this point. However, if they're just stacked on top of each other like this and only the bottom one gets hit and we see a clear rejection out of it with the clear inversion, and like I said, our higher time frame objective is still intact, then this would be a pretty good short to enter with something like this. So let's say for our second example, we just blow through this first fair value gap, right? That is completely okay because we still have our last line of defense with this other 5 minutes. So say we just blow right through this one. However, we come up into this last 5 minute and it's, oh my God, and still see a valid rejection out of it with a clean inversion. Cool, we can go ahead and enter. Our higher time frame objective is still intact. Then we can look something like this, maybe partial right here, and then full TP at our higher time frame objective. Now, the multiple take profit scenario I want to talk about is if price looks something like this, like say we have sell side over here, and this can get, I know for beginner traders, this can get a little confusing, right? Because you're like, what is our higher time frame objective? Can it be these lows? Well, let's say, like I said, this is our major low all the way down here, and we just have random LRL right here, okay? Most likely, after we take out this LRL and sweep past this liquidity, it's going to cause some form of retrace, whether it's into a 5-minute gap or most of the time, it's if we're super bearish on the day, it'll just tap into a 1 minute and keep going, and we won't see the 5-minute continuation. But most of the time, after we take out some area of liquidity on the way down to or up to our higher time frame objective, okay, we are going to see some form of retrace. So let's say these have already got taken out, but like I said, our higher time frame objective on the day is still intact. As long as our objective is still intact, we can still go ahead and short, even though draws to the left of us have already been taken out. At the end of the day, it all really truly comes down to conviction, and the only way to be taught or to learn conviction at all is just showing up in the markets every single day and just seeing it repeatedly over and over and over again. So with that being said, that's going to wrap up my YAPSIS. Let's jump right into our live market examples. So let's just start off with example 1. I believe this was from earlier today, and I would like to say this is a really good example. So we had previous day low all the way down here, okay, and what do we also have? Well, we also had all this sell side liquidity. So if I wanted to short, okay, what I want to see is maybe a resweep of this high, maybe a continuation model if we can get it, and then look for something to come down here. Or if we just straight dump towards that right at market open, I can be like, okay, we just swept out all this liquidity. We have this high right here. Oh shit, we have this high. What else do we have? Well, on the higher time frames, we have these highs right here. So we have targets on both sides of the market. So it's more so, okay, whatever one gets hit first, we'll target the other. And if we can't find the initial distribution inversion, we can go ahead and look for a continuation. So let's go to the 5 minute. Let's mark out market open at 9:30, and let's just go ahead and backtest this together. So right now it's 9:29. The market's about to open. Let's go ahead and see what market open does. Okay, not really nothing. 9:31. Still nothing, and then we get this violent move down. Okay, we're probably going to go towards previous day low. Do we end up going towards it? And then all of a sudden we get this extremely bullish candle. Okay, now if you had enough conviction that you wanted to enter off this candle, then cool, you can go ahead and enter, put your stop somewhere either beneath this order block or right here, and then aim for all this LR and these relatively equal highs above. However, if you weren't fully convicted, because we didn't come and take out all this LRL and we actually didn't take out previous day low, but we did create an SMT with it, so you could have used that to your advantage. But if you wanted to see NASDAQ come and sweep it out or wait for further internal confirmation, then okay, cool, we can go ahead and look for a continuation model setup. So what are we going to look for? Either a 5 or 15 minute gap to open up. Still nothing yet. Still nothing yet. Awesome, cool. A giant 5 minute fair value gap has just opened up. Okay, so what do we want to wait for? Well, we want to wait for us to come and push down into it and then look for ejection higher towards what? All this high time frame LRL above us. Okay, so what ends up happening? Do we get to tap into it? We did get to tap into it. We didn't tap into it much. We're kind of just chopping. We want to see a clear, right? Because yeah, we can tap into it, but if price action isn't acting good, we still want to stay the fuck out the market. So we want to see a clear manipulation with a clear inversion back out. That is going to give us our highest probability. Still nothing yet. Okay, cool. We got a good push down. If we went ahead and inverse this 1 minute right here, this could have went ahead and worked. However, we respected it. What are we doing? Accumulation, manipulation one more time on the lower time frames. Boom. We get one more inversion right here. Go ahead, enter off this inversion. What's above us? Well, we most likely want just to go break even at the unfilled gap that got created right here. So we entered in the manipulation leg. However, we left a 5-minute bearish unfilled gap. And let's say that we want to go break even there because we're not sure if price is going to respect that gap or not. Okay, cool. We probably would have got stopped out at break even on this trade. However, what is another confirmation that we can end up getting? Well, waiting for this 5-minute bearish gap to then get close to. Okay, so do we get the close here? Nope, doesn't look like it. Okay, did we get the close with that candle? Nope, it doesn't look like it. And this very next candle, same thing. Nope, nope, nope. And finally, we broke that fair value gap. We ended up inversing it, and we still have our clear targets higher. So if you want, you can go ahead and enter off this candle, have a pretty tight stop loss somewhere right here, go break even at this internal high. And this could be your 5-minute continuation model as well. And let's go ahead and see if this ends up playing out. Looks like we kind of got chopped around a little bit, right? Price volume kind of died around, but we did end up going out and taking out at least this high right here where you would have took at least one partial, and then we ended up coming out and just edging these highs over here, and that is why you partial, because I believe we ended up reversing after we took out the rest. So again, this next example I have for you guys I believe is perfect, because let's say you don't have enough conviction on this original short right here, right? We got the 5-minute inversion all the way down. Your stop's gonna be somewhere right here. We have all this LR. Okay, we're on the S&P 500. We can potentially look for something like this. But we didn't come and take out the sell side right here to the left. We left relatively equal highs, so maybe this 5-minute inversion is probably going to fail, and we can continue higher. Maybe that's what we're thinking. So we don't have enough conviction, whatever. We end up inversing both 5-minute gaps, and then we end up coming and creating a 5-minute bearish gap right here. So at this point in time, after we create this bearish gap, if I still want to short, I want to see price tap into this and then see a rejection out of it. And what do we end up getting? Well, we end up getting a tap into it right here. Okay, where is our inversion? We have our 1-minute IFEG right here. And let's go ahead and see if this plays out. Where's the inversion? It's going to be with this candle, stops at the highs. Where's our TP? All the way down here towards all this LRL. And let's go ahead and see if this plays out. It looks like it runs directly to it. And actually, after we take out this internal low, you could have went break even. So yeah, this trade, it looks like it would have played out. Now, regarding our last example, I'm going to use ES. We have these intermediate lows all the way over here. Okay. And this is what I'm talking about when price is either just way too premium or just way too discounted in the market. Look how many bearish fair value gaps we have. Okay, so what do we want to mark out? Just the high to the low of this range. Even though we left relatively equal lows, basically equal lows at this point, and we probably know that price is just going to want to tap into this and continue lower, this is going to be a less likely of a setup. Why? Because we're not at 50% of this leg. So we could easily have a 1-minute inversion down here, and I don't know how this plays out. This might have ended up playing out, but we could have easily had a 1-minute inversion down here, and then price invalidate it, come all the way up here, and then possibly look something like this to rebalance this entire leg. Now, am I saying that's going to happen? No, probably not. We are probably going to deliver here, but the chances of that happening are a lot higher rather than us coming and already rebalancing this leg and then taking inversion out of it. So let's go ahead and see if we end up getting this close right here, and we can backtest this together. No, we're still kind of edging it, still edging it. At this point in time, you don't even want to be in the fucking market. This continuation looks like shit. And it looks like we ended up delivering to the draw. And then once we took out the draw, we just continued to go sideways, sideways, and sideways. So this would be a prime example of a lower probability inversion. Now, with that being said, that is going to wrap up this video. I hope you guys enjoyed it. I hope I can teach you something. I hope I did teach you guys something. If you guys have any questions, comments, concerns, please go ahead and leave them down below in the comments. Any link you're looking for is most likely in the description. My one-on-one mentorship, okay, money off on evaluations, whether it's loser trades or alpha futures. My beginner's blueprint to success is all going to be in the description. Just check it out, the conditions video, so on and so forth. So check out links in the description. Okay, I hope you guys enjoyed this video, and I'll catch y'all in the next one.